Welcome, future-focused investors and global citizens. For decades, the US dollar has been the undisputed king of global finance. But what if I told you its reign is being challenged? A seismic shift is underway, known as de-dollarization, and it's giving rise to what we call shadow currencies. This isn't just about geopolitics, it's about protecting your wealth in an increasingly multipolar world. Let's decode it. First, a quick primer. Why has the dollar been so dominant? It's been the world's primary reserve currency, the standard for international trade, especially oil, and a safe haven. But recent global events, geopolitical tensions, massive national debt, and the rise of economic powerhouses like China and the BRICS nations are all pushing for an alternative. They're seeking financial independence and reducing reliance on a single currency that can be weaponized. Now, let's talk about shadow currencies. This isn't a single entity, but a collective term for alternative mediums of exchange gaining traction outside the traditional dollar-centric system. The first major player, Central Bank Digital Currencies, or CBDCs. Think of them as digital versions of a nation's fiat currency, issued and controlled by the central bank. China's digital Yuan, or e-CNY, is perhaps the most advanced, already in significant use. While they promise efficiency, they also raise questions about privacy and central control. Are they a step towards a cashless, highly surveilled society, or simply the next evolution of money? Next, we have commodity-backed alternatives. Discussions are heating up within alliances like BRICS+, Brazil, Russia, India, China, South Africa, and growing. They're exploring a potential new trade currency, possibly backed by gold or a basket of commodities. This isn't just theory. It's a direct challenge to the petrodollar system and aims to create a more stable, tangible foundation for international trade, bypassing the dollar entirely. And let's not forget decentralized digital assets and cryptocurrencies. While volatile, assets like Bitcoin and Ethereum offer an alternative that is outside traditional banking systems, though often still priced in USD. Stablecoins, pegged to the dollar, also play a role, but the larger narrative is about exploring financial freedom away from central bank influence. Can they truly serve as a global currency replacement? That remains a subject of intense debate, but their existence undeniably fragments the traditional financial landscape. So, what does this mean for us? We're moving from a unipolar financial world to a truly multipolar one. This implies increased volatility, potential shifts in global trade routes, and a rebalancing of economic power. Your investments, your savings, and even your daily transactions could be impacted. Inflation might become more erratic, and traditional safe havens might not be as safe as they once were. The rules of the game are changing. How do you protect and even grow your wealth amidst this transformation? 1. Diversify beyond borders. Look beyond dollar-denominated assets. Consider international stocks, ETFs focused on emerging markets, and currencies of nations with strong economic fundamentals. 2. Embrace hard assets. Gold and silver have historically been reliable stores of value during economic uncertainty. Physical assets like real estate, especially productive assets, can also offer a hedge against currency devaluation. 3. Understand digital assets critically. Distinguish between CBDCs, centralized control, and decentralized cryptocurrencies. If you venture into crypto, do your homework, understand the risks, and never invest more than you can afford to lose. 4. Stay informed. The financial landscape is dynamic. Educate yourself continuously on geopolitical events, monetary policies, and technological advancements. Knowledge is your most powerful asset. The de-dollarization trend isn't a prediction of the dollar's immediate collapse, but rather an acknowledgement of its evolving role. The rise of shadow currencies and a multipolar world demands a proactive approach to your financial planning. Don't be a passive observer, be an informed participant.